Hi guys, welcome to another live trading session with Optionables. I am Saket and we are going to review the trades taken on 11th of May. And trust me, today's video is really interesting. There are lot of adjustments, and there are also some important lessons to be learned. So I'll be going through each one of them slowly and try to make sure I can deliver the best and make you guys understand what exactly we do. So if you're liking the content, please do hit the like button below. You can also subscribe to Instagram, Telegram and Twitter down in the link in description. Hi guys, so welcome to another session with Optionables. So as you can see here, we have already taken the trade. We take the trade at 12:30. You can see when we took the trade, both were at almost equal break even, so 246 and 239, so both were at equal prices. And now the market has actually gone down. I'll show you how the market movement was today. So you can see that 12:30 is around this time. So we took the trade around this time and immediately there was a fall in the market. Actually today there are a lot of things to learn. So we will be showing how in short strategy you can still make profit even if the market is trending. So you can see how you can make profit even if the market is trending with short strategy. So this is 12:30, around this range when we took the trade. So you can see here we had got at equal prices. Then the market started moving down. So we have done 33,100 short straddle and the market is already 150 points down. So you can see that there is some imbalance in the premium also, and we have M to M of 5,000. So I will show you what exactly happens at at 320 we would have a stop loss for PE. So the PE hits the stop loss at 320 and we will only have a C leg now. So 1 o'clock there's another trade which is 12 minutes to go. So that's the reason I don't do anything. I'll just let it as it is. So you can see the loss is currently around 4,000 rupees. As we move ahead, you can see market slightly bounces back and our loss goes to almost 20,000 rupees. You can see here the market slightly bounced back from almost 920 to 960, and our profits have gone to negative 20,000, and this got triggered at 320. The stop loss triggered at 320, and now it's time to take a trade at 1 o'clock. So this is what we enter. Right, so here I will show you one important adjustment what we make. As we take the trade, you see here I have 2,400 points. I have shorted another 33,100 CE itself. Technically I should have gone for 33,000 CE, which means I had to do a 33,000 short straddle at 1 o'clock, but I have gone for another 33,100 CE itself. Now I will tell you why exactly I went for this. You can see that if I go for another 33,000 CE, right, there will be a lot of CE. The CE total premium will be quite high because the other one was trading somewhere around 220 rupees, which means 220 plus 175 is almost around 390 rupees versus 252 rupees, which is quite high. So what I did, just to bring some sort of a balance, you can see that I have still maintained the bias. I haven't changed the bias. The bias is still on the downside, but I have reduced the intensity by shorting this at 250 and shorting this at 175. If I had shorted both at 250, then I would have this one extra CE, which will be adding lot of bias on the downside. So now I have reduced the bias, but I have still kept the bias because in case of a reversal, I will be gaining profits. So this is what I do now. Again, I have kept stop loss for both. This is where I keep the stop loss. So now let's see how the trade goes. As you can see, by doing this, now the premiums are, as we move ahead, more or less equally balanced. You can see there is 300 rupees in PE alone, which is one set, and two sets at 145. The premiums now automatically balance themselves. So if I had done the other way around, that is 33,000 CE, I would have got more profit. But this more profit comes with a cost. In case if the market goes up, I will be having more loss, not just 11 or 20,000 what we saw earlier. It would have extended even further. You can see now, even now I don't have much of profits. It's 1 o'clock 1:05 now, and we don't have much of profits, and market has further come down. So when we took the trade, it was around 940. Now it's at 881. So we have again kept the stop loss to this around 340, and premiums are more or less nicely balanced, and you can see the M2M is also slowly trying to go up. So this is one important lesson what I wanted to tell in this video, that is as you take different short straddles, whatever the bias is, just try to maintain that. There was a downward bias, that's why we have little more CE short, but one thing you should remember is don't make it equal, because in case of a bounce back your other side premium is going to hurt you a lot. So just make sure that you maintain the bias. And as we move ahead, so again now our M2M has gone to around 31,000, and you can see that even in spite of M2M going to 31,000, these two premiums are almost equally balanced. So two lots at 140 is around 280, and we have one set at 280, so they are almost equally balanced. So now M2M also crosses 40,000, and here what I do is I do another small adjustment in trade. I'll tell you why. So now this is 304, and this has come to 127. So you can see that I want to maintain little more bias on the downside itself. So as you can see, as I told you, I wanted to maintain this downward bias, but you can see here the bias has changed, because now at two lots at 125 would mean it's only 250, whereas this is already around 300. So that's the reason I exit this one lot and come to this one lot, so there will be little more equal. So now both put together is coming to around 290, and this is at 300. And as you can see, so now as the premium further starts to increase, I do the same thing. Now again I try to balance out the premium. The M2M is currently 45,000. The M2M is currently around 45,000, and I try to balance this out. Again you can see that it has already come to 118. So what I do, I shift this and short two lots at 153, making it almost equal. You can see that it's almost equal now. 153 into 2 is 300, and P is 320. So now I want try further balancing over this point, because it makes no sense. I have already done a couple of shifts. So what I do is I just leave it at here, and you can see the premium further starts to increase for the put side, and as we move ahead it goes and triggers the stop loss at 360 rupees. So now I only have call leg, that to two sets shorted, and I am quite uncomfortable holding it, and it's only 124, and I am quite uncomfortable holding it. So what do? I book my profits. So I booked the profits at 31,000. It's currently only 1324, which is 124. So this is one thing really important. You don't have to keep trading, so you should know when to come out. So the moment your position starts to get uncomfortable for you, just come out of it, because you're going to get many more chances, and you don't have to stick to that. So just come out of it. Even if this was a 40,000 loss or 50,000 loss, I would be out of the position, because 40,000 or 50,000 loss is not hard to recover. If I try to keep adjusting to this position or adding on to this position, it is going to cost me a lot eventually. So that's the reason I just exited all the position at 30,000 when market was trading around 32,700 and time was around 130. So what do I do next? So now I get to chill. I get to take some time off, analyze what is happening to market. So I saw the market coming down till here, again bouncing back, and trying to, so I thought, okay, now this 32,900 will act as a strong support, resistance I mean to say, and on the downside we have 33,750 which will act as a strong support. So based on this, I took some time off, tried to see what exactly was happening to market, and this is where I stopped the recording, and then I again started the recording, because no trades were taken. I again started recording at 151. So right now even I am still analyzing the market, and I don't have much idea about what exactly or what trades to be taken at. So I keep looking at the premiums and try to see which suits the best. And here I decide to short 32,800 PE and 32,900 CE. So I do a strangle here. So first I only add 1,500 quantity and I do a strangle. And you can see our MTM is 30,000 itself. I added the quantity and it's 353. So I have basically taken almost half an hour off. So both are at 205 when I shorted. So we will go ahead and we will see over I will add another 500 more quantity and place the stop loss for the same. And as we move ahead, you see that our MTM slowly increased to 40,000. So there is no big difference in premium for me to make any sort of adjustment. So I just leave it. And so we move another 15 minutes ahead. Now it's 2:15. You can see the time here is 2:15, and again there is no big difference in premium. My MTM is also more or less the same, so which means I don't have to do any sort of adjustment. And Nifty, BankNifty is also well within my range. So I had thought of 750 to 900 and it was well within 750 to 900. So I actually didn't have to do much of a change. And we move further ahead and I add another 600 more quantity, and you can see the MTM now has come to 50,000. It's been 20 minutes since we took the trade. MTM has come to 50,000 and the premiums are again balanced, so I don't have to do anything because the premiums are balanced. And we further move ahead, and this is where comes important part. So the market comes to 780 and odd, and when the market comes to 780 and odd, what I do is there will be slight imbalance in the premium, as you can see, not here, somewhere over here it's 172 and 227, and MTM is around 50,000. I thought slightly I will increase on call side, not very much, so that's the reason I exit 600 from here and I short 600 quantity of CE trading at 223 itself. So only slight position change, not much. And then what I do, and eventually I find that okay, market is actually taking support there. So what I do, I exit 600 from put also and short again something trading at 230. So you can see that the break evens are more or less for all these puts and calls, and my M2M by around 236 has already shot up to 80,000 and market has just consolidated. You can see I have absolutely done nothing. So here is where I exit. When I see that market is bouncing back, I exit and add the new strike, and I get 600 quantity shorted at 32,800 CE and 32,900 PE. Here I have PE shorted and CE shorted. So from 2,600 I came to 2,000 600. So I further increase the quantity now. So I make this 2,500 600, and my M2M now shoots up to 91,000. It's already 239, which means I'll be exiting the trade in another 15-20 minutes. And as we move ahead, so you can see that it's already we have moved ahead almost 12 minutes, and you can see none of the positions has changed. And even though there are some imbalance seen here, I haven't touched anything, and the MTM has shot up to 1,12,000. So I absolutely had to do nothing. So as I had told you about slippages before, so now I exit as think of exiting the orders. So I start to exit only 20% of my quantity so that I can avoid slippages. So I slowly start to exit, and my MTM now touches 1,23,000 and I haven't changed any of the position. And this way I finally keep only 500 quantity remaining, and I keep it another 15 minutes till 3:15, and I exit finally. So this is where I decide to exit the trade. Around 3:05 I exit the trade and book around 1,15,000. So what is the important lesson we can learn here? You can see that the market also more or less moved in the same range. What is the important lesson we can learn here? If you feel that your position is getting uncomfortable, right? So you can see that the position is booked. It's 1,14,900. When you feel that the position is getting uncomfortable, come out of the trade. You will get time to think and come back to the trade. So if I went on adjusting the same position, like I would just keep adding on to positions, making things more complicated. So even if it's a loss, if it's a bearable loss, if you're trading with 1 lakh rupees, then a loss like say somewhere around 2,000, 3,000 should be quite acceptable, which is 2% of the capital. Cut off your trade there. So if not today, tomorrow you can still come to the market and take new trades. So position sizing and risk management is really important. When the position starts to get little uncomfortable, also come out of it, because you are going to find many opportunities in the future to take some good trades. So that is all I have to say in this trade. Hope you got to learn a lot from this session specifically, because the market was trending, and the important lesson what you can learn is even though the market is moving in favor of you or against you, when you feel that okay, this is not the right time, just exit out of it. You will find many opportunities moving ahead. So if you have liked the video, please hit the thumbs up button, subscribe to the channel, and also there is link to Telegram, Twitter and Instagram. Thank you so much for joining. So we'll be coming out with another video soon, that is tomorrow. Yeah. So, and one more thing is you can see that short straddle will make you money even though the market is trending, because from 33,100 is where we did the first short straddle. The market was down almost 300 and odd points. Still we could end with a profit of around 1,14,000. So this is the beauty of short straddle. Hope you have liked the video. Thank you.